Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, March the 21st. The year's 2025. Let's talk trading. Weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. As always, have your risk management in place. Never lose more than you're willing to lose on any one single trade. So for the week, we have the pound at just 6.4 pips above the weekly open. It's 88 off the high and 10 off the low. And according to the dashboard, all the weekly open gaps have filled. And we are near the low of the opening range for the week right here. All the way down to 129.27 at the moment, close to that psychological 25 line. 5 pips off that daily low. And if we look at the month, we are 348 above the monthly open, 87 off the high, and 348 off of the low. And for the year, 417 pips above the yearly open, 88 off the high, and 828 off the low. We had an inside bar, daily inside bar 6 days ago, and we are within that area, but we're above the monthly inside bar from 14 months ago and the weekly inside bar from 12 weeks ago. So there really is not much inside bar action to be had on the upper time frames. Today's range for the pounds, it's only about 48 pips. You can see there's only 4 pairs over 100, and all of them are yen pairs. For the buy zone daily open crossover, you can see we had a short triggered probably at the Asian session. Then you can see we got near that short trigger here in the London session a couple of hours ago. And then we've fallen since then. But it looks like we're putting in a range right here. Rats, the range is too low, but we're still bouncing off that daily low here. Seeing if maybe it can crawl out. For the pivots, Bambino Flex Indicator said to short price. The pivot trading plan said price near the pivot is a short. We haven't taken out that pivot today. So yeah, we missed that pivot by 2 pips. And we still have the some more pivots to hit or to take out for this month. Or maybe not. We'll just have to wait and see. As far as the weekly goes, we did take out the weekly, and we have not taken out the monthly. In and out of the lower wick zone at 129.36. You can see, remember, price doesn't like staying in the wick zone, but you can see here lately the statistics showing here we're down to 65%. Normally that's over 70. So that's telling you things have slightly changed. And probably when you look at the daily chart, you can see that we've had some pretty big wicks. And that's so a lot of times price just can't get out of the wick zone. Just something to note. For the week, only 98 pips. So far, we still have the rest of today, but that's at the 0 percentile over the last 12 weeks. And it looks like we might just be increasing that here. Price is down to 129.24. I saw it 129.23 a few seconds ago. There we go, 129.23. We broke out of the previous week's high, 26 pips. We did not break out of the previous week's low, so we've got higher highs, higher lows so far. I think we're going to keep that. High minus close 91, close minus low 7 for the rats. For the weekly crossover traders, high minus open 93 and open minus low only 5. So we'll have to wait and see what happens here. In today's action, you can see we're just breaking these previous M30 lows. You look at H1, we had that happen. Simple crossover trades. We had an outside bar followed by an inside bar. And usually those give some good breaks when they break. We had a lower high trigger for a couple of pips right now. You can see here, it's kind of pushed down. Now we're starting to do the rangy thing that Walmart likes to exploit. Looking here at just a plain old flip-flop box, you can see the last trade was worth a couple of pips. And when you get in these tight ranges, you can just go ahead and take a couple of pips here, a couple of pips there. Don't get too greedy. And every now and then you'll be in a trade and it'll just pop up. Maybe you're up 4 or 5 pips, in just a couple of ticks. And then you can exploit those. Just take that fast money. So ATR percent for March, we're at 104 right now, meaning we have exceeded that ATR. So looking at the range, 435. So you can see we're over 400 so far, 3 months in a row in range. And for those who like to hold, close minus the year-to-date open, we're up 3.34%. Now that was high. Remember, we've been coming off of that yearly high. Now let's see, is there anything else interesting? Let's look at the year-to-date accumulated, 915. So we're closing in on last year. And taking a look at the trade reminder, let's see. Month is turning up, buyers still strong control. We're above the pivot, above the previous bid on the month. Higher high, higher low. Look at the week. We're prices between the wick zones right now. We're above the previous bid, barely above. Oh, we just crossed below the weekly pivot there. And we have a higher high, higher low. And for the day, sellers strong controlled. Its price is turning down. So we had a turn trade and continuation. So price turning down. Sellers strong control. Fade the pivot buy. But we're nowhere near that pivot. And a lower high, lower low. And the previous bar was an outside bar. And we are below that lower wick zone. So it looks like we're picking up here on the M30. Maybe we'll get a cover. We'll have to wait and see. And let's see, I don't recall any questions more on the ideas we were talking about, going for broke. Um, One of the things we did mention, or Walmart mentioned to me actually after the video, but I'll pass it on. How I always say, never lose more than you're willing to lose on any one single trade. Well, he does that a slightly different. He says, never lose more than you're willing to lose in a single day. So, and so he'll set up his risk for the day. Let's just say he's willing to lose 20 pips on the day. Well, if he's up 10 pips, that means he could lose up to 30 pips. So sometimes you'll hear how he said he's added in the trades and done things like that because he has that extra um, leeway because he's already up. He's willing to put that all at risk. So for the day, he won't lose more than he's willing to lose if things just happen to turn against him. But that gives him a little more room. So, for example, if he was trading this round numbers, say he's trading $1 pip and he's willing to lose $20 for the day, well, if he's up 30 and price goes and he's in a trade and he goes against them 20, he's still got 10 pips to play with in his head. So that's why he might even put on an extra trade just to see if he can get out of it. And that's why sometimes he wins so big because he might have 3 or 4 positions, in versus just that one single position. And we can see prices moving up here, crossing above the hourly low right there. You look at the hour chart here, so you can see price was pulling back up, or moving back up. See, we have a new M15, so it's trying to break out. Broke out. There's an outside bar. We had a break. So we'll have to see how that plays out. And just watching the charts here. I'm trying to remember if there's something else that somebody might have asked. I don't recall anything else. And so, fellow traders, I am going to wish you all a fun and safe weekend. And when you come back to trade, I want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and